All right, welcome everybody to Market Talks with DrStoxx. It is the 10th of October, and we've got a kind of unusual combination of market movements here this week. We're at Thursday, which is printing almost, not quite, not quite a classic reversal bar. Not quite, because it didn't take out yesterday's high. The high yesterday was 577.71. Today's high, 577.58. So we're just a few pennies short of yesterday's high. A classic reversal bar is where it opens up within the range of the previous day, travels northward to take out that high of yesterday, plus a good 3 weeks of highs, comes back down to close within the range of the previous day. That's a classic reversal bar, and they usually spell some trouble ahead for at least a few days. But we're as close as you can get to a classic reversal bar, and the fact that we did not get follow through on yesterday's breakout to new all-time highs is troubling. Troubling for just a very short term in the market. We've also got all kinds of bearish divergence going on yesterday's print. And again, short-term stuff, nothing to worry about too much, but it does signal that probably into next week, we're going to have some trouble. Now, what's triggering this? Well, the CPI came out this morning, and it was just a tick higher than expectation. And the market's been very happy, I guess, that the Fed has brought inflation down to close to their 2%, target, but now we're back up above 3%, 3.2%, 3.3% on a year-to-year basis. That's not good, because that really forces the Fed to kind of go back on more of a hawkish posture. They probably are not going to lower rates as quickly as the market wanted them to. That puts pressure on biotech, small caps, bonds, growth names, right? These are securities that need cheap capital, and if they don't have it because the Fed has got the foot on the brake, then they're going to suffer. So the market has to price all that in. It's not what the market was thinking we're going to get, so it's a bit of a surprise, a bit of a curveball, and the market has to deal with that. Now, surprisingly, we're not getting a really big slide today, and we're not. Where are we at with the VIX? Always good to keep an eye on the VIX. Yeah, it's pretty tame today. It's up above 20, so anytime you get above 20, you're in a market that is tends to be a little more difficult for swing trading, and tends to see more sharper downturns than you would normally get. With the markets between 15 and 20, you get some good volatility. It's good for trading, but it's not an easy market. Underneath 15 is where things get really easy, right? Everything goes up. You just throw money at just about anything and it sticks, and you hang on for a few weeks and you're good to go. We're not in that kind of a market, and we haven't really been there for a while. But once you get up above 20, things get more difficult. You have to be very selective. You have to keep your sizes small. You have to be open to shorting and taking on some hedge positions. We haven't really done much of that lately because we haven't needed to. We just hit all-time highs yesterday. So it's not like we've been, in this sell-off mode. We haven't been. But we may need to start doing that heading into the next couple of weeks. We've got an election coming up in less than a month. Who knows what the market will do after that? And yeah, there are just a lot of unknowns. The market doesn't like uncertainty. The market likes to have everything out on the table, and then it can make some wise choices. All right, so VIX is problematic. Let's take a quick look at the tick. Yeah, it's been pretty quiet today as well. So the VIX is quiet, the tick is quiet. A few days ago, we got down to below 1,500 on the negative, and we had a reading down to, it was near 1,800 a few days before that. So there have been some days where we see some panic selling. Panic selling on a given day tends to allow the market to go back up the next day. But today is just very quiet reading, right? 750 at the top, negative 1,000 at the bottom, slight bearish bias there, but it's very, very tame. It's not. We're not seeing a lot of fear build in just yet. Okay, so let's take a look again. SPY. Where is it going to do? Where is it going to go? Well, it does need to come back in, and we were also crashing up into a resistance trend line, probably back here to test the 21 period moving average, which is around 575. No, I'm sorry, that's current price, 568 or so. And is it going to do that in a day? Probably not. Give it 2 or 3 days with an upside bounce along the way, and we'll probably test that 21 period moving average, the midline of the LRC, the linear regression channel, and there is a pretty healthy looking support trend line with a couple of exceptions where it broke down and trapped the bears. This has been a line of support. So SPY, to make a long story short, should be modestly weak over the next 5 or 6 trading sessions, and then we should be okay. QQQ, double top, not such a good look. This is more of a classic reversal bar. It did take out yesterday's high and printed a new 3-month high, 2.5-month high, and then right back down into the range of the previous day. That's not a good look. That's a bearish posture. The only thing that is going for QQQ here is that we are above the open today. So when you get a red bar that closes below the open, by the time you get to the close of that day, that's your classic reversal bar. We're not quite there yet. We've got the higher high. We've got the open within the range. We've got the close within the range, but we don't. The fourth thing we don't have is the red bar. So all bets are off, but it is a double top. We've got bearish divergence. You would see that, I think, if I put on my divergence indicator. Yeah, there it is. All kinds of bearish divergence on the current high. And yeah, the path of least resistance is not higher. It is probably to come down here 484, 485, testing the midline of the LRC. Maybe the 21 will hold. Not going to hold my breath. In worst case scenario, we come all the way down to the 50 period moving average over the next couple of weeks, and that's not going to happen overnight, but without some sort of catalyst. Small caps are hurting today because of the hot CPI, Fed fear, recession fear. Small caps rely on cheap loans, and if the loan interest rates are not coming down because the yields are not coming down, then yeah, they're still in some pain. The good news is that they tagged again today the 50 period moving average. They were down here about a week ago, bounced cleanly from there, came back down to test again today. Potential for a bounce from here, but it's only a potential. There's really not much in this chart. There's not much down there in volume. There's not much in price that gives me major hope that we printed a bottom today and it's all upside from here. Don't see that. You can see a lot of distribution heading into this pullback. It was a kind of a mixed tape prior to that. We do have oversold stochastics, but as I've said many times, oversold stochastics can get more oversold, and the same with overbought. Bonds are in a world of hurt, really painful because I hate to say it. I've been in a wheel play with the TMF, which is the 3x leverage version of the bonds, and man, it's been a stinker. We had lots of profit in it heading into about a month ago, and it's been pretty much all downside from there. We've been in a covered call. In fact, anyway, I don't want to go into it. It makes me look really horrible, but it's just one of those trades that I should have exited several weeks ago, and I did not. Gold is back up today after a nice little pullback. Actually, this is a sweet-looking pullback, right? A, B, C pullback to the rising 21 period moving average, to the midline of the uptrending LRC, and a 3-bar reversal today. Now, the volume is not real good, but I think gold is going to be a good place to be as the market works through potential recession, potential inflation, all kinds of things that the market's wrestling with, geopolitical issues, et cetera. And gold is has been a real target from the central banks who've been buying it up, especially China, buying up gold in hand over fist. And this is just a nice looking little pullback. Only one distribution day in there, lots of good accumulation days as well, oversold stochastics, and a nice soft pullback. And remember this, ABC pullbacks are the best, right? ABC. First leg down, second leg is a slight up, and the third leg down again. And when you get down to a place of support and start to see the price reversing like we're seeing today, that's usually a good place to get on board. You can play gold with calls on GLD. You can play gold with a leveraged mining instrument like NUGT, that's 2x, or GDXU, that's 3x. Or you can drill down, as we did, into some of the miners. We're in AGI, and there are several others that are always good to look at, right? There's NEM is the biggest one, AEM, I think I've got that one right, Anglo something mining company. Anyway, it's on the IBD top 50 list. You can find it there. All right, so gold looks pretty good. Miners too. Miners have been, look at this, all the way down. Here's your ABC pullback, right? A, B, C, all the way to the 50-period moving average this time, and a big, nice looking rally, a gap and go off of the rising 50-period moving average. I think we probably will be adding NUGT or GDXU by the time before we get to the close of trading. We've got an hour left of trading today, so I need to keep an eye on that so we have enough time. All right, so you're going to see some pain in a group like ARK. Not horrible today, so this is actually kind of a hopeful sign. I have what I call my canaries in the coal mine. When the market is worried about the Fed, when it's worried about recession, when it's worried about interest rates, then you will see bonds, biotechs, builders, banks, especially the regional banks, and groups of growth names like ARKK, which is a disruptor fund managed by ARK Invest. They're doing really well when everybody's buying the growth names, and they're doing really horribly when everybody's getting out of growth names. And they've had a real roller coaster ride. But it is a good way of marking when the market is willing to take on risk and willing to believe that capital, at least in the near future, will get cheaper. All right, so there's that. Let's take a look at some of the mags. There haven't been very good quality setups here, and it's been sort of slim pickings, but most of them are up today, and the overall market is selling off. So that tells me that the rotation today is out of the cheap stuff, out of the risky stuff, and into blue chip, mega cap tech stocks, which is what most of these are. AMD got whacked on, they had a big investor day today. They're coming out with their new chip, and everything was good. News was good. The performance was amazing. And for whatever reason, the market sold off. So I think AMD, that's probably overdone, probably a sell the news event. And in a couple of days when the dust settles, AMD should be a better buy. Qualcomm has been just flat, choppy, trendless. In fact, it is trending lower, but it hasn't been trending at all for a few weeks. That's a no-go zone as far as I'm concerned. You want to get it above the 200 at least before you start getting interested. Facebook has been a very strong stock. In fact, it was the strongest mag for a while. But when you get up here into the blue zone of the uptrending LRC, even though it's uptrending, you got to be very careful. And this is typically where you start to see some profit taking. You saw it back here. You saw it again over here. Probably looking at a 2 to 3 week slide to discount whatever the market needs to discount before this gets back on track. It's a good place to take profits if you're long, trail up your stops, and not a good place to put on a new position. So we look at Microsoft very carefully yesterday, and I decided that it wasn't really worth jumping on board just yet. way too much overhead, and the overall trend is still lower. The LRC is falling, the 21 is falling, the 50 is flat. And we're underneath all the moving averages, and the moving averages are, they are stacked just barely, but we're almost at what market makers like to call a death cross. When the 50 crosses the 200 to the downside, that's typically a place where you're going to see big fund managers say, I'm out, right? And not that it triggers a sell signal and it's a very lousy system, but if you buy every bullish cross and if you sell every bearish cross, you're not going to make money. But it is something worth noting because it is a signal to market, the guys who run the big funds, that, hey, Microsoft is not safe right now. And it's a no-go zone. So until that changes, Microsoft is off my list. Avgo is do some profit taking. We've got some bearish divergence, quite a lot of it, up here near the blue zone, near former resistance highs where it sold off sharply before. And so, again, not a good place to initiate a position. But, this, with the volume balance the way it's going, it's not a bad hold. Not a bad hold. Looking for a breakout. Really one of the better technical setups right now. But I have a feeling that it's going to be some tough going for the next couple of weeks. Better time to buy these guys is down here, right? Fresh breakout on a pullback, retest of the breakout line, 21 period moving average. There's an old saying, right? Above the 21-day moving average, this is an exponential average. Good things happen. Below it, not so good things happen. And we're still above the 20. LRC is in a nice, modest uptrend. That's the time to buy down in here, not up here. We saw Apple, Google. We did go long on this little inverted head and shoulders. Looks like a bottoming pattern. The only problem, we've got earnings upcoming in about a week. So we're not going to be in this position long, but right now it looks pretty good. Tesla came all the way down to test a very strong area of support and rallied right back up to the 21 period moving average. However, tonight it reveals, the robo-taxi plan that I don't think it's in production. I don't think it's profitable, but it is something that they're looking at. And they're going to reveal it to investors tonight. A lot of big hoopla, right, going on around that. But the market usually is a little wary about Musk and his product reveal. Remember when the Cybertruck first came out and he threw a couple of rocks through the window? Always something goes wrong, and almost always the market sells off Tesla after they do this kind of product thing. So I would be out of Tesla until we get past that. And the big dip down today was scary. It's nice that it rallied back up, but when you get all the way down there and rally back up, it tends to come back down again for a second test. So just keep that in mind. Netflix is off to the races. Again, it's going to get into this area up here in the blue zone where people tend to distribute, not accumulate, but it's a very good hold. It's in breakout mode. It's a good hold. Technically speaking, nothing wrong with that chart at all. We went long ARM and looking for this to kind of break out of a sort of a semi-cup and handle, scallop bottom, whatever you want to call it. We've got the stacked MAs, the 21 period moving average. We're up here at a level of resistance. It's been up here before, and it only did a shallow dip. So I think this time it should break out. But we'll move up our stop just in case. Amazon is in a no-go zone. It broke below support, rallied back up to test it. That's a good thing, but I don't think it's going to make it probably back down again. NVDA is the monster stock. Everybody needs to own it. I have it in the long-term family fund. We do not have a swing trade in it now. We were in it earlier. We took a nice profit on it using NVDL. A couple of days ago, we got out when it hit our target, and it's only been up from there. So this is a very strong stock. But again, we're up into the blue zone. I don't think this, however, is going to see distribution because the places where investors with deep pockets can make money in this market are getting smaller and smaller and smaller. NVIDIA is definitely in that group. It should start to see some good inflows. Adobe is doing a nice bullish engulfing reversal. Not good volume yet, and there's a lot of distribution down here, but this is a good indication that there is bullish favor on this level, right around 500. So if you want to add a new position, Adobe looks pretty good. It's not perfect at all, but it looks pretty good. Snow is having an amazing ripper of a time, and yeah, I'm happy because I am long some snow in the family fund, and it's not been a good hold for months now. It's been in a downtrend. Had all kinds of amazing press and analyst write-ups and so on, and it's got a very good product that the market likes, but it just hasn't been able to translate that into earnings growth. I think that's about to change. I think it's about to go into expansion phase, but there's a lot of overhead in this chart. Technically speaking, this is a difficult chart. You've got gap resistance. You're in a downtrend. You're up into the blue zone. It's had a nice run recently, but man, all kinds of things could go wrong from here. So it's a hold. It's not a new buy, and let's see where it goes. This is the stock I was kind of teasing over on StockTwits and in my live trading room. Micron Technology. It's been around since the early 70s, right? It's an old 50-year-old tech company, and they've kind of morphed themselves into the preeminent semiconductor space for memory products. So they're in your smartphones, and they are in the servers that run the data centers, and there's a third component I'm forgetting. Well, the various cloud spaces, anything that has sort of big data for storage, they make the semiconductors, the chips that run those storage units. And they're doing great. They've had 3 quarters of accelerating earnings. They've got a massive amount. I've never seen this before in any tech stock. A massive amount of 5-star analysts who are all on buy or better with massive price targets. Never seen that before. I'll show you that in just a sec. The only thing that's missing is the price. So it came out with earnings a few days ago. Very good. It was a double beat. They raised forward estimates. The market loved it, and then it just got sold, which you don't want to see after earnings. You don't want to see those earnings gaps get closed. Didn't quite close it all the way, but still, that's a concern. I don't know why. This is out of favor with the market, but it is. However, I do think that the worst is behind it. It should start to at least go flat for a while and accumulate some shares before it starts to rise. And let me show you that group of analysts, right? So this is Micron stock forecast. It's at a strong buy. 24 analysts cover the company. 18 of them are 5-star analysts, and they are all, I think, there's only one hold, there's one sell. 22 of the 24 are on strong buy or better, with a high price target of $250 from a 5-star analyst. You don't see that every day. The average price target is 148, and it's probably much higher than that because this low estimate is from months and months ago. So, yeah, so look at all these 5-star, right? Buy with a 28% upside, a buy with a 66% upside, a buy with a 71% upside, a buy with 137% upside. I don't know who this firm is, but he's a 5-star analyst. Every time he issues a buy signal, 32% is the accumulation on top of that, and he wins 71% of the time. So he's got something going for him there. 56% from Susquehanna, and a lot of 30s, right? 30s and 40s. All right. So clearly something is up with Mu. Oh, and the last thing I want to say about this is that it has had some, in recent trading, and even again today, it's had some good call flow coming in. Deep pockets, big trades, sweepers, blocks coming into Micron with time. So that's always a good sign. always a good sign. Especially when it's unusual, right? When it's above the open interest, that's always a good sign. So that's all I got to say, guys, and I'm going to wrap it up here. I'm sorry I can't take chart requests today because I need to jump back into the room and make sure that we don't need to make any changes before the close. And God bless everybody. Have a great rest of the week, and we'll see you back in the room in just a few minutes. Bye for now.